I know that at Simon Quick, one of the things that you say is that you invest alongside your clients, and that 10% of the firm's assets under management today are the firm's own capital or members of the firm's own capital. I get the sense, just based on even that origin story, that that's much more than a tagline. So what does investing alongside our clients actually mean in practice for the firm and the advisors and executives at the firm?
Yeah, so there are 34 owners of the firm. You're looking at three of them right here. When we say that we're investing side by side with our clients, that means that we're putting our dollars, my capital, Mark's capital, Darcy's capital, in the same investment vehicles that our clients are investing in. It also means that we're using the same CPAs, the same trust and estates attorneys. And why we're proud of that is we want to be aligned with our client base. And for example, we just launched a private equity vehicle. If we're presenting our private equity vehicle to our client base, it's really important for me to be able to say, hey, you have 30 plus Simon Quick colleagues invested in the same vehicle. So we believe in it, which is why we're presenting it to you. And that's, I think, just a powerful statement and one that a lot of firms can't always commit to. And knowing that the Simon family and the Quick family are obviously substantial investors within the group of ownership, and that they remain fee-paying clients to this day is really important to us.
Yeah, you answered my next question already, which was what type of capabilities does that structure unlock? And you talked about the private equity vehicle, but when I was looking at the differentiated investment access that you offer to your clients, private equity, venture capital, private credit, real estate, et cetera, it felt to me like that investing alongside our clients was directly related to your ability to be able to offer that.
Definitely. And we were early investors in private markets. We've been investing in private markets for 22 years since our founding. What we were late to do was create a commingled vehicle that kind of made access easy and created a more programmatic approach. We launched that this year, and initial interest by the Simon Quick team and our client base has been really robust. And what's happened is over the years, we've developed so many great relationships with private equity, venture capital, growth equity, private credit funds and fund managers that we can invest in pretty much anyone that we want. And they'll frequently send us co-invest deals or kind of unique pre-IPO investments that we want to be able to participate in and do it in a way that the clients can benefit and not have to answer, hey, you've got 10 days to make this investment. Is it yay or nay, right? And having a fund vehicle that can give you the asset class exposure allows us to have discretion on what goes in it. So clients automatically benefit from the access.
I was at the Tiburon CEO Summit last week in San Francisco, and there was a lot of talk about alternatives and how big are alternatives really in this space. There's so much, like so many headlines, so many companies that have popped up. They're all sponsoring all the events that like Mark and Darcy, I see you at all the time. I think that what I'm hearing from executives across the industry is that investment into some of these alternative asset classes is really not as dominant as the headlines might portray it to be. However, I think for a firm like Simon Quick, who's been doing this for 22 years, and the types of clients that you serve in sort of that 10 to 50 million assets under management range, clearly it's a different story for your firm than it is for the broader industry. Would you agree with that?
Yeah, I would agree. It's now, I think, at a point where if you're a high net worth individual and you're working with an advisory firm, it's kind of table stakes to have access to alternatives. And if you don't have an in-house team or, decades of experience doing it, it's really hard to provide that access from day one. And a firm like ours has been in the alternatives world for so long that we feel very fortunate to have the network that we do, the team that we do, and certainly the results that we've had with exposure to those asset classes. A lot of, I think, the asset growth is also a function of, the sovereign wealth funds and pension funds and endowment foundation world getting a whole lot bigger, but also the really ultra wealthy families, they've seen kind of continued growth in their capital base. It's easier to be a private company today than a public company. It's just a lot less fun being a public company than a private company.
And Meg, I would just add to something Chris said during our origin story around what Peter Simon and Les Quick saw as a hole in the marketplace because of their experience serving on charitable boards. They took this model of, endowment and foundation management, right? Or you're taking this pool of capital and investing it across different managers and asset classes and applying that to the high net worth individual space. And they found that where the players they were going to on Wall Street were offering more of a product-based approach. They wanted to create this sort of open architecture approach and bring that to the individual investor.